Mortgage brokers. Have you used one? Almost 2/3 of home loans last year were processed by mortgage brokers. So who are they? What do they do? And how can a mortgage broker help you buy your first home or repay your home sooner? That's today's topic on Mind Over Money. Hi everyone, thanks for tuning in today. And if you're enjoying the podcast, please leave us a 5-star rating on Apple or Spotify. Wow, that's if you think it deserves a 5-star rating, because that's going to really help us reach more people and get the message out there. So today we are talking about home loans, and joined with me is Archie and Lachy.
G'day.
G'day, Tim. G'day, Lachy.
Great, so let's jump right in. So obviously, as we get started, full disclosure, Waymaker, who we're a part of, we do provide a mortgage broking service. And for that reason, this chat is around the questions we get around mortgage broking and the service that we provide. And that's one part of what we do. But there's a lot of assumptions and expectations when people go into setting up a home loan. So we thought we'd clear it up, make it simple. And especially for first home buyers or people coming off the fixed rates at the moment, or who are just unsure in general about buying a home. So a mortgage broker can really help you work through those things. And that's what we do at Waymaker as well with our coaches and advocates, is to walk us through that journey. Great. So let's take a step back and start at the beginning, all the way at the beginning.
About 30 years ago. Not that beginning.
Genesis chapter 1.
Well, 30 years ago, that's Locky's. It's about Locky's beginning, I'd say.
Hey. Cool it down, boys. I'm 31.
So I guess this is more of a question for Archie, but where did the industry of mortgage broking kind of begin, and what's the origin story of brokers in Australia?
In a nutshell.
Yeah. So in a nutshell, the reason we have brokers today is because of the internet. And so, we have lots of services today that are there now because of the internet. And one of those is being able to get a home loan and work with someone, remotely, because you don't need to see people in person now. And I think that's a big part of why we're seeing, so many people take a home loan with a mortgage broker now, because, through COVID, we couldn't meet up. So COVID actually helped us, overcome some of our fears around using the internet and doing things with people remotely. But if we go back in time, if we go back into the 70s and 80s, home loans and the banking industry was highly regulated, and it was a real problem for people to get home loans. And so what we ended up having happen was we had mutuals and building societies came along who could provide home loans for specific people that were in a specific industry who the banks wouldn't lend to. You could get a home loan through a mutual or a building society. And then in the 80s, we got deregulation of the industry, which brought in banks from overseas. And so by the time we get to the 90s, we start to see mortgage brokers coming into place, a bit like insurance agents, where they could actually provide a comparison service to help you find, a home loan with a good interest rate. But we've gone a long way from there. It's like, today is so different to going back to then. And even for myself, back in the early 2000s, I was basically writing a home loan on one piece of paper. And so on one piece of paper, I could put down the person's details, their family details, their incomes, their expenses, submit that and get a home loan, through in a couple of hours. Whereas you compare that against today, there's so much more that we have to do today. And again, it's industry regulation. So we went through deregulation. Now we've gone through regulation again. And so we have a lot more regulation, a lot more compliance. So there's a lot more to go through. Okay, so in the last decade, we've gone from 47% of people using brokers to now 67% last year using brokers. And it's also enabled banks to decentralize themselves as well. So if we think of our big banks who were everywhere, CBA, Westpac, NAB, ANZ, they had branches everywhere. But you can see now that they've closed down a lot of those branches because banking is vastly different to what it was. And the need for those branches has, dropped away. And so it's even good for the banks because they don't have to supply, a premise and, train people and pay people and go through all this stuff. So it's even good for the banks to be able to go through brokers.
Before we talk about the assumptions around mortgage brokers, can we just pause and talk about our debt in Australia and, why this whole industry is growing? Because we do have a lot of debt in Australia.
So Australia does have a lot of debt. Just looking at some stats there before, it's like we do have a lot of debt compared to our GDP, our gross domestic product, compared to other countries. And it's high not because of government debt. We have relatively low government debt, but we have high personal debt. And part of the reason for having that high personal debt was we did go through a period over the last probably 20 years where debt just went crazy in Australia. We could borrow for everything. And you could go out and take a home loan at 8 times your income. And then you could go out and borrow another 300,000 to pay for cars and other stuff. And so you could just jack your debt to crazy levels. And what APRA's done is they've actually pulled that back a fair bit and put some regulation in place there to try and stop that. Yeah, so we've had this culture of using debt to pay for everything. And the assumption I feel that people were making was, let's let the kids pay for it. I used to hear that a lot 20, 30 years ago. Let's let the kids pay for it. And I think there was even ads on TV back then about letting the kids pay for it. And yeah, not a great mindset.
Archie, do you think in the timing of all this, we had a period where interest rates right up till COVID were just going downwards slowly over, more than a decade, while home values were increasing? So if you were a Gen X, maybe you've been paying down your home loan, you're getting about halfway through maybe, but now you look at your home and the value's gone up and you've got all this equity to go borrow it just increase your debt because there is this ability to go borrow. Do you think that's partly why debt just kept going up when it really should have been taping off?
Oh, definitely. And we had all the advertising around that too. So we had all the banks advertising, use the equity in your home to take the holiday that you deserve, to buy the car that you deserve. There was all that whole push in around our culture to use the equity out of your home. And so, we had people that had, loans. If you went back into the 90s, our home loan might have been $30,000, $40,000. And then we get into the 2000s and the home loan's gone from 30, 40,000 to 200,000 and rising. And that's because people were refinancing and taking the equity out of the home to pay for stuff.
Debt obviously can be a tool, a wealth building tool, but like anything can be miswielded.
Yeah.
And
by culture
and
marketing.
The marketing, and then you can do some things that can get yourself into a bit of trouble. So I think that's why you need a good team around you and ask the right questions and use a bit of wisdom in this area. So maybe we can jump into some assumptions or expectations we make about mortgage brokers or things we've heard when talking to clients, and just to set you up for a win really from the get-go, so you know, okay, this is what to expect and this is maybe what to not to expect. Maybe it's a little bit bigger than what we thought. So maybe the big one you see a lot, this is just the marketing ploy, is always around interest rates and the rates you can get. I think an assumption is that the broker's only role is to get the lowest possible interest rate. But in reality, there is a lot of nuance and every individual situation is so different and there's a lot of different strategies you can make. The main role isn't to just get the best interest rate. And in fact, the broker for your situation can look at all the different rates and get you in the best overall home loan with a good rate and a competitive rate. And that's all part of it. But that's not the only funnel to look at your situation with, because or else that'll really limit your options. And when we're talking about long term, these are big loans, big purchases. You want something that over the course of 10, 15, 30 years is going to actually, you're going to be paying back less. And that's not always down to just the rate.
Yeah, definitely. Especially when you're coming in as a first home buyer. I mean, what is the problem? Are you looking for the best rate, or are you looking to get a home? And if you're looking to get in and buy your first home, that is the problem. The interest rate really should not matter, because that changes all the time. And as you pay down your home loan, you can work with your broker to get the rate down or switch products. So it's just, again, it's that marketing. It's got us focused on the wrong thing.
Yeah. Yeah. Well, look, another assumption could be that brokers are just trying to sell a loan. And, that's actually not how the industry is set up now. The industry has a lot of checks and balances now. And it may have been at one point where it was all about just selling a loan and getting a loan through. But now with all the checks and balances, it is around your affordability, your ability to repay the loan. It's a lot different to what it used to be.
Which maybe couples on to the next point is this: the assumption could be it's easy and quick to get a loan. But I think with these regulation changes, there is a lot of boxes that need to be ticked. And that's not always a bad thing. The goal behind it is that we're putting people into loans that they can afford. With that comes a lot of checks and to making sure that this is a good scenario and a long-term situation for you and your financial position.
Goal's the right word there. Not heart. There's no heart in the government.
That's fair.
Another one on that is this idea that it should be easy and fast. People also think that they are the perfect client for the bank, and just because they're paying rent means that they should be able to get a home loan. Or maybe they did a check on their credit score and they have a good credit score, and so they think, oh yeah, I'll be good to get a home loan. When that's not the case. There's a lot of different things banks assess you on, and paying rent is just one thing that's factored into your living expenses. Doesn't mean you're suitable to get a loan.
Yeah, that's a big one. And if we've got that assumption, we can be let down really badly, when we realize that we can't get a loan or we have to jump through a lot more hoops to get a loan. And I think it's even worse for people who suddenly have to jump through a lot of hoops to get a home loan when they were thinking, I'm the perfect client, I should be able to punch this through, no worries.
Especially if they've been playing around with those banking calculators online, because those calculators ask very, very basic questions. And they're really just sales tools. Yeah.
They're just funnels. They're trying to funnel you into a product. And the other thing you got to watch too is some of those will actually check your credit score and actually have an impact on your credit score. And I've come across that in the past where someone has a really bad credit score because they've been doing all these calculators online. So you do have to be wary about what's online. That sort of leads into the next one, which is, I don't have to tell my broker all about my finances. That's one you definitely don't want to have because, with all the checks and balances now, you do have to tell us everything.
If you're a director of a company, you own crypto.
Tax debt, hex debt, they look at everything now. So nothing is left out anymore. Which has a big impact on our borrowing capacity. And the good thing is, if you tell your broker everything about your finances, then the broker can actually find the best way forward. But if you don't tell them, you can end up going down a path and getting knocked back on a loan because all of a sudden this stuff pops up that you've been hiding. And so you really don't want to hide stuff because there's nothing worse than all of us doing a whole pile of work and getting to the end and getting no result.
Yeah.
That's the point, isn't it? Yeah, I think the last assumption is just, if I can't get a loan because I have only casual income, or I am a business owner, or a low income, or no deposit, or low deposit. Even these can be assumptions, and there are interesting solutions out there that you may have not just heard of yet. So that's another good reason to talk to someone. And worst case, it's okay, let's get on a plan. Maybe right now you're not ready, but you could be in a place in 3, 6, 12 months.
Yeah, that's it.
So what then does a mortgage broker do? Can we summarize it in one sentence?
A good mortgage broker helps you understand what's required to get a home loan and secure the finances you need to purchase a home or to refinance a home. And so we're not just assessing a home loan, we're helping you find a really good way forward with the big picture in mind around your finances and your situation. So we do want to help you get rid of all the assumptions and expectations that may not be appropriate for your situation, and get you into a good place where you can actually achieve the goals that you set out to achieve.
Hey, it's Lockie here. I have to ask you, have you been thinking about buying your first home? But with all the craziness in the market and inflation, interest rates, it just feels like an impossible goal. Well, I'm here to tell you that it's not. Every week at Waymaker, we celebrate a family or individual that has defied all the odds and purchased their very first home. So how do they do it? Well, like we've talked about on the podcast today, at Waymaker, we help you clear the noise and the assumptions so that you can have a clear plan and take action. Plus, we have a team of experts to help, from our own financial coaches to our partners of buyer's agents, solicitors, and lenders who can help make the path straight to secure your home. So if you want a winning team helping you to buy your first home, it all starts with booking a free call with one of our mortgage brokers. You can arrange that free call at waymakerfinance.com.au. We'd love to speak to you. That's waymakerfinance.com.au.
Another common question we get, Archie, is how is a mortgage broker paid? Because that could be a mystery and people can wonder, why are you helping me with this? So could you bring a bit of clarity around we get paid by what we do?
Yeah. So as a broker, we're actually paid a commission from the lender that we choose. As we were talking about before, with all the requirements now, those things are there so that we can't just pop you through with any old bank or the bank with the best commission structure. We do find that pretty much all the banks now have a very similar commission structure. So we're not trying to pick a loan based on commission structure. We're really just trying to pick a loan that suits your needs. And then whatever particular bank we choose or financial institution, because they're not all banks, there are different types of financial institutions still out there that we use. Yeah, they pay us to do that work. So instead of the bank or the financial institution having their own staff and their own paying for all that sort of stuff, they're happy to pay us. And that can lead to them accessing way more clients. It can lead to them accessing clients in specific industries that they really want to reach. And that's why they pay us to do the loan. Now, as a broker, we do get comparable rates with the banks, interest rates. Our job is to help you find the most suitable product for your situation. So sometimes we can need to pay a higher interest rate to get the suitable product that suits your situation. And that may only be a temporary thing. It may be a higher interest rate for 1 or 2 years, but it achieves your goals. And then you can, go back to a normal interest rate. And it all depends on our circumstances, and again, that's why you want to go through a broker so that all your circumstances can be assessed and the best solution possible picked out for you. The other thing is, if you go directly with the bank, is you're only going to see that bank's product. You're not going to see any other products that could be better suited to your situation because they can only show you their products. The other way we get paid is there are special circumstances where we may charge a fee, which can be paid out of the loan for certain situations to help you get a most appropriate loan for your situation. And the other thing to watch out for is there are clawbacks. So if the loan is changed within 12 months to 2 years, so either paid back or refinanced somewhere else, then there are clawbacks, and so you could find yourself getting a bill from your broker for that clawback, because we can't do all this work for nothing. and the reason the bank claws back the commission is where they need that loan to stay in place for a set period of time, for them to make their financial income that they need as well. So if if the loan is changed too quickly, then they're not going to make any money on that loan, and so therefore they take back their commissions. So yeah, watch out for those things.
Okay, let's jump into what's happening with borrowing capacity lately. People have been asking about this. HEM. What is HEM, and why is it causing problems with borrowing capacities lately?
Well, maybe we can start with borrowing capacity. See what you think, Archie. This is my little calculation, but your borrowing capacity really is your total income, whatever you get in a month or whatever, a period, minus your expenses for that period, which is where we'll talk about HEM, minus your liabilities, other debts, minus the new debt plus a buffer. So they make sure that you can pay back that debt, and that kind of equals your borrowing capacity. Within that, one of those is your expenses. So the HEM, household expenditure measure. If they give awards for acronyms, I hope the person who came up with this one does not get one.
Sounds like something the government would create.
Yeah, definitely.
So it's one of these protections put in place to make sure that you're not put into a difficult situation or into hardship through the loan. So they put this minimum expenditure. This is based on whether you're single, how many dependents you have, couple, and then it's based on your income. So the more you earn, the more they expect you to spend, and the more kind of kids you have. Pets is not involved in this, interestingly enough, but
people spend more on their pets than their kids.
Yeah, don't bring it up. Don't bring it up.
True.
So the government's trying to put everyone into a cookie cutter box. Okay, so what could go wrong with that?
Well, what could go wrong with it is, we got interest rates up in the 6%, 7%, and plus a buffer of 3% added on top of that. So you might be getting assessed on an interest rate of 10% or more, which makes your loan repayments pretty crazy. So it just drops the borrowing capacity that you have massively. And then we've also got these set household expenditures, which is interesting because, in places like Toowoomba where it's cheaper to live than in places like Sydney and Melbourne, we have a higher household expenditure measure compared to Sydney and Melbourne or Brisbane. And so you could be living on, a very normal low expenses because you're a saver, and but you can't borrow any extra because of that, because you're given this set expenditure. So that again really impacts your ability to borrow. And the lower your income, the harder it is, because that set expenditure takes away your ability to borrow. The other thing in that borrowing capacity is income, and every bank looks at income differently depending on where your income's coming from. And so you might have some government income, you might have some casual income, you might have some overtime income, or commission income, and the banks will look at that income very differently. So you've got to be, again, that's where your broker is so important, to work all these things through and figure out who's going to look after you the best, which financial institution is most suited to your situation. So one of the loans I ran the other day, borrowing capacity was between 70,000 and 320,000 based on the different banks and how the banks looked at that person's situation. So that's how big the variation can be on borrowing capacity.
So this is from APRA on the banks, this regulation. I get the heart behind it, but it's kind of backfiring. We're seeing a lot of people, especially in just regional cities like Toowoomba, on normal incomes that don't have a lot of living expenses and aren't able to borrow what they need to borrow to buy a home. And so, this is going to be more in focus as we go through this year around maybe what the government needs to do to tweak what's happening around HEM and how we calculate things. Now, of course, interest rates coming down will help that. But right now, it looks like it's tough.
Yeah. And it really hurts because, if you're paying $700 a week rent, you can afford quite a good sized loan. But under these rules, you might only be able to afford a $200,000 loan. But based on how much rent you're paying, you could afford a $400,000 to $500,000 loan. And so it's not fair. The system right at the moment it feels very broken and very unfair at the present time. But again, that's the reason you want to see a broker, to actually work this stuff through. So, you don't want to take a negative path and say, there's no point in getting a home loan because it's too hard. You've actually got to work it through.
Yeah, especially working for a broker now, because things will be different in 3 months and things will be different in 6 months. So start talking to a broker now and get yourself ready, because by the time you go to put in a home loan, again, things could change. So don't sit back and wait, because then you might wait too long and miss out on an opportunity to actually get into a home, or to start taking control of your home loan as it is now and get yourself into a good place in the next 6 or 12 months' time. So, don't sit back and say it's too hard. talk to us and let's help you work on your situation. So lastly, let's just talk about the value of using a broker, just mindful of time. What is the value of using Waymaker as your mortgage broker?
So as we've already mentioned, you get a proper comparison on the different loan products that are out there and what's going to be suitable for you and your situation.
Definitely. Internet websites, comparison rates on billboards, they're not helpful. They're not actual true comparisons. And you don't even know if you're actually eligible for those products.
Yeah.
Yeah, on the products, there's access to government subsidies and incentives. There's some interesting ones out there that you may not know about. I think we've been able to really help a lot of first home buyers maximize the first home buyer scheme, and whether that's first home super savers, and really work towards that purchase. So like we were saying before, there's a lot of problems at the moment, but there's also solutions out there, and it just might be a bit more of a slog, but you can definitely, if you're focused, you can definitely achieve some amazing things even now in this market. So just having full access to all your options and to be able to work through those is so key.
Definitely.
The other big advantage is really working through your goals and the whole process of decision making, because we do have in our minds, we have this negative bias that always tends to take us down the worst path. And so your broker is there to help you make good decisions and help you, process information in the right way to set you up so that you can actually, achieve your goals. And so if that a goal is to buy your first home, we really want to help you achieve that and find a way forward with that. And there are quite a few different subsidies and different systems out there that will enable that to happen. And so we've done many of them this last year. A lot of people that we've helped get into their first home this last year didn't think it was possible. And now that they're in their first home, or they're about to be.
Yeah, I think lastly too, there's this value in being part of a bigger community. We've got partners such as Matt Tembo from Copious, who can help you find a home. He's finding some really good off-market properties for our clients. We can connect you to conveyancers, solicitors, insurance for your home, things like that. Just people that can help you make the journey of buying your home a lot smoother and easier. And it's just that level of confidence when you have a team helping you purchase your home or pay off your home. You just get much better outcomes than trying to do it yourself and relying what's online and figuring it out yourself and doing all the loan application yourself. It's a real slog. So
the other thing is, as a broker, you do receive advice and you do receive an advice document, and that sets out what products were compared, what the goals are, what was important, why the product is suitable. So you're not just, getting thrown into a loan, you're actually going through a process to understand the loan product that is being chosen and why it's being chosen.
Awesome. Yeah, no, that's really good. I think that really should clear it up for people. If you've been wondering what a mortgage broker actually does, you've got a bit of the history now, and where we are today in the lending cycle, some of the assumptions that we covered, how brokers get paid, and the value of using a broker. So, okay, guys, I think we'll leave it there.
Thanks, Tim. Thanks, Lachy.
Thanks, guys.
And if you want to reach out and talk to a Waymaker mortgage broker, there is a link in the show notes, or you can go to waymakerfinance.com.au. As always, this is not financial advice. You need to go get personal advice from a professional regarding your home loan, tax, legal, personal financial advice. Do not get it from a podcast. But we're glad that you joined us today, and we look forward to seeing you again in the next discussion in a fortnight. Okay, bye for now.